Rental property ROI, or return on investment. That's what we're talking about. So I'm going to deep dive into my tried and true methods for determining the profitability of rental properties. So my method, there are 5 ways rental properties can make you rich. Okay. Why cash flow should be the number one goal. The unexpected expense that will ultimately ruin your investment. So ways to make money on rental properties. Let's talk about these. Number 1 is appreciation. Number 2 is debt paid down. Number 3 is tax benefits. And number 4 is cash flow. Let's jump into these real quick. First off, appreciation. This is a graph from 1900s to 2010 that shows you what has happened to house values over that time. You can see here it's down like, 3, and we are almost pushing 200 for the housing price index. So you can see it's gone straight up. The other thing you can see, 2008-ish, you're seeing it come down. And then if this graph continued, you'd see it going right back up even higher than where it was prior to 2008. So basically what this is saying is house values are just on an onward trajectory. They're just on their way up. Real estate's gone up almost every year with a few exceptions that you can see here. And there have been some corrections. Right now we're back to the 2007 levels in most areas, all the way back up here. So appreciation, okay, this is the Case-Shiller Index for the U.S. National Home Price. This dotted line basically shows you what's happening. This is another way of looking at this from 91. This is where you start to see the prices level off in 2008, 2009. They came in a little bit lower. This is again nationally, and you can see it trending right back up higher than where it was in 2017. And actually 2020 is going to put it even higher than that. So this is really interesting to keep in mind. There's this old saying, right? The old saying is, don't wait to buy real estate and wait. And as we look at these graphs and we look at the appreciation that's happening, that's something that we should be considering when we look at it. Now, I'm not suggesting you buy just for appreciation, because we don't want you to do that. Lots of people, including myself, worry about buying at the height of the market. So the market's high. So what do we do? This principle is called dollar cost averaging. Dollar cost averaging is an investing strategy where you take the amount to be invested and do that across a period of time to reduce the volatility impact of the overall purchase. So how do you dollar cost average? This is used a lot with stocks and that type of stuff. How do you dollar cost average on houses? And it's pretty simple. You just buy a house every single year, or buy a house every other year, or a few houses every single year. If you purchase a house every year, some years you might buy at the low, others you might buy at the high, but your overall average will be lower. And that's what's going to make sure that you are getting into good investments over time. So how much has real estate really gone up from 1991 to 2017? So in 25 years, real estate has gone up 22%. That means if you would have bought this house for $100,000 in 1991 and you sell it in 2017, it would have gone up. It would be worth $122,000 or a $22,000 profit. However, that does not take into account what we call forced appreciation. Now, forced appreciation is where we buy something, we improve the property, which does forced appreciation, plus you've got the ongoing appreciation that's happening naturally. So let's say you bought the house for $60,000, you put $20,000 worth of work into it, so now you're into it $80,000, so it's automatically worth $100,000 because of the work you did to it. That means you'd have $20,000 or 20% of equity. Then if you waited 25 years, you'd have another 22% of equity, so you've got 42% equity in this property. So forced appreciation and natural appreciation. Natural appreciation is the house just goes up without doing work to it, without doing anything. We're seeing a 22% increase over the last 25 years. That's if you paid retail property prices for that property. If you get an even better deal, you're going to see a larger gain. So since 1960, the next way, rental prices. Let's talk about rental prices going up or rental prices appreciating. Since 1960, rent has gone up 163%. Okay, median rents. So you can see here 1960, this was the median rents, and you can see where it's at today. And that median rents, I hate to break it to you, but rent prices are going to continue to go up. Yes, there's going to be some ups. Yes, there's going to be some downs. It's kind of interesting here when you look at this 2008. If you kind of draw a line here, rents actually went up in 2008 in most areas. 2009, 2010, you can see rents actually went up. A little drastic or a little downturn in the real house income, but the median rents you can see have continued to go up over time. So property value over the long term does go up. Rents over the long term do go up. Historically speaking, that is the case. So let's jump into number 2, which is the debt pay down. Each time a payment is made, a portion of that goes towards principal. This pays your loan down. So how debt pay down really works. Most people aren't that familiar with what's called an amortization schedule. And amortization, and we're going to do this on an annual basis, so rather than monthly, but it applies monthly as well. So you can see here, year 1, which is months 1 to 12, $17,000 in payments. So if you divide that by 12, it's like $1,200 or $1,500 a month. The principal paydown of that is $5,000. The interest paydown is $12,000. So at the end, you have $294. Here's what's interesting. If you come to the last year, okay, principal paydown is $17,000. Interest paydown is $400. So you can see how it swaps, right? So originally, most is going to interest, and at the end, in your last year, most is going towards principal. This is why buying and selling houses, if you're for a homeowner, as a homeowner, if I buy a house and I pay it down for a few years and then I buy a new house, I'm basically starting over again on this debt pay down because I pay a little bit towards principal and then I move. And I start again here and I put a little bit towards principal and then I move. And then I put a little bit towards principal and then I move. This is why when you're into this, 12 or 13, 15, 20 years, you're getting as much going towards principal. Well, let's see here. Principal pay down is somewhere in this year. Year 14 is where you've got about as much going towards principal as you do towards going towards interest. And then after that, most of it. And that's one of the things, if you're using Investor's Edge, you can see how much somebody owes on the property. We use this, we call it a reverse amortization, where we actually do the same calculations. And with these calculations, we determine how much they actually owe on the property using average interest rates for that time. And that can help you considerably in marketing to find people, because if they're on the downhill side of this, that can be really helpful as an investment. As you can see, the first year, most of the money goes towards interest. Very little goes towards principal, as we just discussed. Okay, this is why if you buy personal residence, we talked about that in quite detail, very little goes towards principal, and the longer you have the loan, the more goes towards principal over time. So each month, a portion of that principal payment goes there. The great news is when you own that property, the tenant is the one paying for this, right? So you're not paying that. So each month when they make that payment, a portion of that payment they're making to you, when you pay your loan, is going to go towards paying down the principal, and it doesn't come out of your pocket. So somebody else is paying for your property. So if the value goes up a little and your rent goes up a little and you pay down the loan a little bit, you're creating all this equity for you. You're creating this money that's going to go into your pocket. So you make money by appreciation. You don't have to do anything. That just happens. There is forced appreciation where you do have to get work done on the property. There's also debt pay down. The tenant does that for you and paying it down as they make those payments every month. It's not coming out of your pocket. They're paying for that. Next, let's talk about some tax benefits, okay? Depreciation, mortgage interest. These are different types of tax benefits that are out there for landlords. So depreciation, mortgage interest tax deduction, deferral of capital gains using a 1031, property expenses, services, and business expenses. We'll talk about all of these in a little bit of detail here. So what is depreciation? It's the cost to keep the property in good condition. So each year, real estate investor is allowed to depreciate an amount of money. The IRS has set it at 27.5% years as the useful life of a property. Basically, that's what they're saying. So depreciation, if you have a property worth $150,000 and you divide it by 27.5, you're able to depreciate $5,000 $5,454 each year. And so you can deduct that. So it must be a business. It can't be, you can't be a homeowner with this. So these deductions, a tax deduction is deduction that lowers a person's tax liability by lowering their taxable income. So in our example, for the $150,000 over 27.5 years, it's $5,454. Let's say your income was $50,000. Then your new income, if you own this property, would be $44,546. This is especially important if you're against a tax bracket. If you're not familiar, this is the table income for married filing jointly. This is the federal tax bracket. So these brackets are for 2020. So let's say you made $85,000 and you purchase a rental property, you'd have $5,454 of tax. That would lower your tax bracket to $79,546, which would put you in a lower tax bracket. In addition, you'd save for your state as well. So that's really important. The other thing is deductions. A tax deduction lowers that taxable. Let's see. This is going through the same thing we just talked about. Okay. Always consult a tax professional. Again, this is for entertainment purposes. But what I want to mention now is accelerated depreciation. So you can have somebody go do an assessment of your home. With that assessment or property, they will determine the life of each item, how long the water heater lasts, how long this will last. And this will allow you to write it off quicker. So meaning rather than 27 years, it may be 7 years for some items. And then you'd be lowering your tax basis by $21,000 in this $150,000 purchase example that we've just been talking about. The Economist calls this the biggest tax break you've never heard of is this whole idea of depreciation. And those who take action now can take advantage of a decade-long benefit of these tax brackets and these laws promising to real estate investors. Capital gains deferrals are 1031. This is really important, okay? So this is a great benefit for real estate. If you sell an investment property and there's money that you made, you can defer those capital gains and roll that debt and equity into a new property or to several new properties. There's rules around this, but essentially you pay zero taxes on the gain if you roll it into a new qualifying property. I've done several of those, highly recommend them. And if you went on future live casts on 1031 exchanges, let me know. Property expenses. Okay, repairs. When you repair the property, you can do that with pre-tax dollars. So you don't have to pay taxes on it. You can do the repairs of the property and then you'll get taxed on what's left. Maintenance, upkeep, property taxes. Basically anything you pay related to the property will lower your taxable income and lower your tax basis, tax bracket. Services. If you pay for legal advice or consulting or utilities, property management, you pay for software, those types of things can lower your cell phone, your car, those types of things, gas, office supplies. If you pay, it will be a deduction. So let's just get into this cash flow. This is the one people talk about the most. I think they're least concerned. They talk about it a lot, but it is the most important thing when analyzing if something's going to be a good ROI on the property. Cash flow is the difference between what the property costs you and what you get paid. Several things help right now to make cash flow even better. One is these low interest rates. The interest rates are at historic lows. Two, increasing rents right now. We're seeing rents go up. And three, good management. The better you manage your property, the better it will be in order for you to make a profit when it comes to the cash flow. Okay, so if you're interested, you can get a copy of our free rental calculator at dohardmoney.com/rental-calculator. Okay, we got a whole bunch of comments I want to jump into here. So as minimum wage goes up and cost of living goes up, rents go up. Rents are just going to go up no matter what. There's only so much property. If you look at California is a great example of this. When you look at the Bay Area or any of those things, those rents and prices have just skyrocketed because there's a supply and demand issue. Owners tack on $5 to $40 per year. Yeah, I mean, I recommend doing a rent increase every single year. Even if it's just minimal. Was on a podcast last week and a savvy investor like yourself recommended not to pursue rentals during this time with what's going on. What do you say? Rob, it depends. It just depends on your situation, what you're trying to accomplish. I would like to understand why. I don't think there's ever a bad time to buy a rental property. I'd like to understand their arguments as to why they think it's a bad time. I think the principle is dollar cost average. Yes, are rents high? Are prices high? Yes. But the problem is if prices continue to go higher, you're going to miss out on buying a property at a really good deal. Personal example for me, a couple of years ago, I was looking at buying an additional rental property. I held off on it. And now my wife's kicking me saying we should have bought that house, but I was afraid we were on the height of the market. But we were at the height of the market. But guess what? The market went even higher. So I think it depends on a lot of situations, but dollar cost averages is the principle. And I would only buy properties if you can get cash flow. So if you can't get cash flow, if you're just banking on appreciation, then you're in trouble. But yes, if you could buy a cash flowing property, comfortably buy a cash flowing property and then in dollar cost average buying one every year, then I think you'll be happy that you did. Now, that doesn't mean the market could go down, just like 2008. If the market goes down again, you're going to see values go down, and you're going to want to keep buying as it goes down, which will dollar cost average. But if the market continues to go up, you're going to be really happy that you bought it. So either way, if that market goes down, you buy other properties that help lower your cost basis in it. I think it's as good as it's going to be because the demand for housing, that's the rail. I'm with you there too. It's just going up like crazy. Just joining, what question was mentioned? You'll have to watch our replay, but we're talking about rental properties, if it's a good time, those types of things. Even if others like us looking to buy, to invest and so forth, and that demand. Yep. Sold my investment property at a loss. I had it for 5 years. Yeah, Zelda. It just depends. If you sold a property recently, the issue I think really comes down to, did you buy it right to begin with? Because right now with values that have gone up so drastically over the last 5 years, it probably comes down to either you had to put money into it, or you had unexpected expenses that you weren't planning on, or just should have bought a better deal to begin with, which I know is painful. But anyway, I'd love to know more about that, Zelda. Greg, so if I sell a property, make $100K, turn it and buy another house for $200K, and in that year that I sell the house for $200K, that first $100K profit is now not considered gains. So, Greg, it's called a 1031 exchange. We've got to get into some more detail on this because there are some particulars on it. But it's called a like-kind exchange. It doesn't mean you don't have to pay taxes. It means you can defer them. Hopefully, defer them forever is the idea. But you have to roll it into a new property. But when you do sell that property, eventually, if you take the cash, then you'll pay taxes on that. What you can do though is make that long-term capital gains, which will save your cost basis as well. But yes, you could buy a property, you could 1031 that property into another property, and then if you sold that property, then you would pay taxes on that property if you didn't roll it into a new one. Personally, if I'm doing a fix and flip, I typically don't do any type of a 1031 exchange. I just take the ordinary income or long-term capital gains. But if I'm selling a rental property, I typically 1031 that into a new rental property. And one of the reasons for that is called depreciation recapture, because you'll have some issues around that as well. So hope that helps, Greg. If I invest and then at the end sell the last house for what I paid for it, do you get out of paying those gains? No, you end up having to pay the piper. The taxes will have to get paid at some point, but if you 1031 exchange into properties and you don't do that, you won't have to pay them in your lifetime, is the idea with this, Greg. So I hope that helps. If not, throw some comments on here. Rob, what do you suggest is a good minimum cash amount for a rental? $300. Rob, on my rental cash calculator, I actually go into that in quite a bit of detail. I think $300. If you can get $300, I think you're doing awesome, depending upon how much your rents are. So I think 10%, if you can make $100 to $200, if your rent's $1,000 to $2,000, I think is wonderful. If you can get $300, I like to see $200, but it depends on what you're calculating. So if you look at my rental calculator, which we're going to get into detail next week, I take into consideration capital improvements, vacancies. So if you take all those things out then and put them in a separate account, which you should do, then your rental return is going to be a lot less. That's going to probably drop you to $100. But we'll get in detail and check check out this free rental calculator. It'll help you a lot with that. How often do you share this information? Very informative, Anita. Every Tuesday at 6 p.m. Eastern Time, you can join us for the live cast. Really love to have you here for that. And if you miss it, you can also go to YouTube, Do Hard Money, and check that channel out. I appreciate your kind comments. So, Rayo, I definitely take $300. It's on the top rent paying for loans. Yeah, for sure. Like, yeah, if you get $300, I think it makes a lot of sense. But I think next week we're going to do a deep dive into this rental calculator. I think it will be very helpful for you. So, what about a flip and sell? Can you 1031 gain for a buy and hold? Yes, actually you can, Anthony. That's a great question. So yes, you could own the property, do a 1031 exchange into a buy and hold property. You could definitely do that as well. And if you want more info on 1031, I can give some basics, and then we can introduce you to some 1031 professionals, which is a reason why you'd want to be a member of our community of Do Hard Money, is you get these types of resources. Okay, great live this week. Love the new guests. Wonderful. Okay, so what you missed last week, we talked about rental properties part 1, choosing the right neighborhood, determining which areas are viable, long-term rentals, deal-killing factors you should walk away on the spot, the difference between cheap and good deals, and how Burger King investment ruined an investment of mine. If you haven't seen this, go to Do Hard Money, or go to YouTube, type in Do Hard Money, and check this out. You'll really, really want to see it. So check us out on YouTube. In the meantime, make sure you have a free rental calculator. dohardmoney.com/rental-calculator. Future live casts. What are you interested in hearing? We've had a few comments earlier about some things. Wholetailing, determining rental costs, coronavirus investing, analyzing rent, wholesaling remotely. I think, was it Rob or Dan? I can't remember. You want to wholesaling remotely? That's on here. Please, what you see here, type that in, and that will be my voting for what we're going to do for future live casts. Choosing a good contractor, virtual wholesaling, finding cash buyers, seller financing, contractor bids, what makes a good rental properties, one we're doing right now, business partner deep dive, something else, making offers without seeing properties, buying remotely, determining repairs, subject to auctions, closing a deal, sales skills, income properties, BRRRR, which we've actually done a really cool BRRRR one, seller negotiating at the kitchen table, reverse wholesaling, all this. If you're interested in one of these in a future live cast, please type it in the comments now, so we can know what interest levels are, so we can get you the best information. Again, download that calculator, dohardmoney.com/rental-calculator. You are going to want it. Great live this. Okay. Tuesday night, 6 p.m. Eastern time. Yeah, Anita's be there. Let's see, all of the above. Rob, that just means you're going to have to be here every single week, which I would love. Contractor bids, Anita, appreciate it. Making offer without seeing the property. Zelda, I got it. Making offers without seeing the property. Okay. Tax auction properties. Desiree, you're probably tax auction properties. We don't do a lot on that because we do not promote buying tax sales. We do have auctions, so we actually did a whole session on auctions. Check it out on YouTube and you can see our auctions. But tax auctions, we are not a big fan of. Rental calculator, fantastic. Congratulations. Great, perfect. Wonderful. Yep, we got the calculator in there. Okay, if you enjoyed what you've heard today, please check out our podcast. It's called Income Hacker. If you're an Income Hacker listener, please put the comments in here. I'd love to know if you've listened to it. If not, I highly recommend it. Especially, I can't remember who it was that was talking earlier about vacation rentals. So today's swag winner, you're all wondering. Let me go through. This was from last week, right? So if you want to win this week's swag, keep the comments coming. Go to the recorded video, put comments there, do thumbs up. We'll be watching all that type of stuff. But from last week, one of the things we're giving away a killer Do Hard Money OGO hat. We've got a killer Do Hard Money water bottle. I'll be announcing the winner in just a minute, so hope you're here. We got a a forearm gripper to make your arms super strong. We've got a water bottle or what is it called? Insulator. We've got another one of these killer. I love these actually. These are the old school ice packs. They're fantastic. We've got another jump rope. We've got a Do Hard Money stress house. We've got another one of these forearm strengtheners. We've got the what are these called? The bands, the swag bags, that type of stuff. So our winner for last week for participation, again, to earn this, it's participating, asking good comments, being a part of the community, those types of things. Our winner. So Anthony Gopal won 2 weeks ago. So he was our last week's. This week, best comments, interaction during the recording. Our swag winner is, can I get a drum roll? Everybody ready? Rayo on one. Congratulations. Rayo, you're going to be getting our swag box of the week. We already talked earlier today about what's in this week's. If you want to get it, we've got a killer OGO bag. Make sure you comment. Make sure you do those. So, Rayo, to claim it, or anybody else that hasn't claimed yet, go to support at Do Hard Money. Funny, that is typed wrong. Do HARDMONEY. Subject, you're the live cast winner. The body, make sure you give us your mailing address, your cell phone number, and your email address. We'll be sending this swag bag out. Congratulations, Rayo. So happy you're with us live today. If you aren't with us live or you're new, please, 6 p.m. Eastern Time, be here every single Tuesday. If you haven't already, please download the free rental calculator. dohardmoney.com/rental-calculator. It'll help you with some of the things that we are going through here. Okay, Anita, I'll be here. Wonderful. When I join the membership, will somebody help me and assist me with all of these? Anthony, great question. We have lots of stuff in our membership area that we'll go through all of the things we're talking about here in depth. We cover a lot in the live cast. The membership goes in deep. Come on, baby. Swag. Anastasia, be with us. Maybe next week you'll be the winner. Yes, I listen to the podcast. Zelda, fantastic. I hope you're enjoying it. Rayo, need that stress relief. Supervisor at UPS here. Rayo, I bet you need that stress relief. UPS, all deliveries going crazy. Let's see, why, Desiree, why are you stressed? Because I got so many deliveries, I'm thinking. Desiree, I love some comments. If you anything else. Woohoo, Rayo, great, clap, clap. I love it. Congrats, Rayo. Yeah, absolutely. Thank you. Okay, nice. Awesome info, Ryan. Keep the education going. Rob, thank you. I really appreciate it. Anastasia, good info. Thanks. You guys are welcome. I really appreciate you being with me today. I appreciate you taking your time, your most valuable resource. If you are going to take some action on this rental property stuff, please put that in the comments as well. I would love to know if you're looking to do that. Also, anything you want to have for future live casts, please type in the comments as well. We'll go ahead and sign off for today. Thanks so much for being with me. Same time, same place. Make sure you leave comments, not just here in the live, but also on the video when it's posted, so that you can earn this week's swag bag. Good night, everybody. Have a great evening. Make it a very profitable day.